Hello everybody, my name is Niku and welcome to the Trading Setup channel where we explore the world of trading. You build a strategy from different pieces and the market breaks it within minutes. Today everything worked and tomorrow the same actions leads to the opposite result. It feels like the market is playing against you on purpose. But in reality, the problem is not the market, but that the strategy elements do not match current conditions. And if you watch until the end, you will understand how to build a strategy so that its parts do not conflict with each other. And before we dive into the mechanics itself, I want to say one important thing. I created a separate resource for you, absolutely free. There, I share the essence of my many years of experience. You'll find ready-made setups, real trade examples, as well as useful tables and materials. In the pinned messages, I post indicator settings, risk calculation schemes, including the martingale system, which helps control the load on the deposit and avoid draining it because of a series of mistakes. I regularly update all these materials, so I recommend checking it out right now and grabbing everything for free while it's available. And you will also see real results, mine and my students. I left a link in the description. Go there, join, and don't forget to activate the promo code that gives you a bonus to your deposit. People who really want to grow in trading have already gathered there. Now, let's move on to trading. Today we're going to look at how combining two of the most popular indicators can give you a slight advantage in trading, and if you really understand what they are doing, can help you find better entries. So we're going to add those indicators to our chart quickly. First thing we're going to do though is we're just going to make sure that our time period is set to 30 seconds and we will be doing 2-minute expiry trades. Now I'm going to add two indicators, very popular indicators. These are some of the most common indicators used in trading. We're going to add the RSI and the stochastic. Now I'm just going to make a quick visual change. This is the way that I use my RSI. So I'm just going to make a quick visual change to this. This is not something you have to do. This is just the way I prefer it. But we are going to leave the input on a 14 period. So that's how many candles back it's going to check. There we go. And we're also going to leave the stochastic as it is. We're not going to change any values. K period 14, D period 3, and smoothing period is going to be 3 as well. I'm just going to change these two colors quick. Again, this is a visual preference. This is not necessary for you to do. Okay, so why do I want to use these together? You need to keep in mind that both the RSI and the stochastic are momentum indicators. Okay, so they are classified as momentum indicators. And the reason I do this, the RSI like this, is that while the RSI is above the 50 line, we have bullish momentum. And while the RSI is below the 50 line, we have bearish momentum. Same goes for the stochastic. Now you will notice that on the stochastic, I have prominent overbought and oversold values. And then on the RSI, I have prominent 50 line value, which is halfway between the area. And it is very simple. If my stochastic loses momentum and makes a bullish crossover as it did here, and my stochastic rejects from the 50 line, does not break through but sends up again from above the 50 line, that tells me that the bearish momentum has decreased and we're starting to gain bullish momentum now. And then I simply go with the direction of the trade. It's that simple. So this would have been a 2-minute buy right on this candle, because this candle is the one that rejected off where the RSI rejected away from the 50 line. And if I took a 2-minute buy on this candle, on the close of that candle, this would have been the last candle that was open, and this trade would have closed in about 15 seconds. And we can see that at the same time we had a bullish crossover on the stochastic as well. Okay, that's how simple this is. That's what we're going to be looking for, and it starts making sense once you understand that both these indicators shows you the momentum. It's also good to keep in mind that the more momentum something has, the harder it becomes for it to slow down and come to a stop. So if we have high momentum, this is also the reason why you sometimes see the stochastic just hover in the overbought zone like this, and price just keeps pushing upwards, or you will find areas where it's basically stuck in oversold area and you just see price going downwards. Okay, that's because it's got a lot of bearish momentum or a lot of bullish momentum, and price just keeps going. Now that we know what we're going to do, it's time to look for some entries. Okay, I'm just going to start flipping through some assets and see if we can find any areas where the RSI is rejecting off the 50 line, whether it's on the top side or bottom side, and then we're going to look at the behavior of the stochastic, and if we find something that looks decent, we will go with the trade there. Okay, so we're just going to start flipping through some assets. Okay, so it is important also to note that if you are looking at the way this the RSI behaves and rejects, it is important to wait for the close of the candle. Do not assume that if the RSI is hitting the 50 line, don't assume just because it's hitting the 50 line it's going to reject off it. Wait for the candles, wait for those candles to close, and then see did the rejection take place or not. Okay, we have the RSI lifting. I would like to see some green candle coming in here. If we get that bullish crossover, this should be a decent rejection. We can see how the RSI is lifting up. Stochastic is making a bullish crossover, but like I said, we have to wait for the close of the candle because this can turn into a red candle. We don't know if that's going to happen. And if that does happen, it's going to pull the RSI through the 50 line, and it's going to pull this cross, avoid this cross here. So on the one side, I kind of hope it does happen. It did not, so we're going to go with a 2-minute buy. I did not get in where I wanted to, but that shouldn't be too much of a problem. So we can see now that the crossover did take place, and we did get the bounce of the rejection of the RSI. So my momentum, the RSI has retained bullish momentum, so that's still there, and then my stochastic is also showing me that the bullish momentum is increasing. We did make the bullish crossover. We made this crossover above the 50 line of the RSI, which is even better. We can see that that's more than halfway clearly where that crossover happened, and now we just need to wait for the timer to run out and see what happens. Beautiful green candle. It did hit some resistance there. Let's see if this is going to come down before our position closes. We just passed the halfway mark, and we have just under a minute left on this. So this means this candle, and then one more candle before our expiry runs out. Massive red candle coming in here. This will be the last candle, so if this candle closes green, we are good. If not, we'll look for different entries. As with any other strategy, you will have losing trades. There is no 100% winning strategy. There is simply no, it doesn't exist. There's no strategy that's going to give you a 100% win rate. So if you are still looking for it, you can stop now. Doesn't exist. It's just one of those things. There we go. Trade was good. We got a 2-minute buy. We entered opposition because the RSI rejected and the stochastic made a bullish upwards turn. Remember, this is not just a random place for the RSI to turn upwards. If the RSI did pierce the 50 line, this is not a trade I would have taken because it showed me that we switched to bearish momentum instead of bullish momentum on the RSI. Okay. So that's a very simple strategy explained. I'm not going to risk it because we did dip in underneath here on the RSI. Not going to risk it on this asset, but there's a very simple strategy. As long as you pay attention to what the momentum of the indicator of the RSI and the stochastic is showing you, wait for those crossovers and rejections to happen at the same time. And then from there on, you're just going with the flow. So basically, the strategy is designed to take us it is a continuation strategy, and we are just going with the direction of the current move. Remember, when there is an upwards move, there will always be pullbacks like these, and this is what we are simply measuring with the RSI coming down to hitting the 50 line and rejecting. We then can fairly safely say that what is happening is basically just a small correction and that the current movement direction will continue. Okay, if you want to move further, If you want to see breakdowns of my trading sessions in real time with dozens of other strategies that you can immediately apply in practice, get daily setups and access to full strategies as well as working indicator settings, write to me. I have a private trading community on Telegram. It's not just a chat, it's a place where real work is done every day. We analyze the market together, share results, discuss mistakes, and grow faster than alone. But not everyone can get in there. I personally select participants because I want the community to remain strong and motivated. So if you're serious, write to me directly. You'll find the contacts in the description under this video. And then one more thing, I don't plan to keep the community open forever. In the future, it will become a closed club, accessible only to those who are already inside. So the spots are limited, and if you're interested, it's better not to postpone. And of course, don't forget to subscribe to this channel. Here, I regularly share strategies, breakdowns, and useful tools. The subscription is free, but the value is enormous. Thank you for watching. I'll see you in the next video, and until then, may the pips be with you.